Hey everyone, so in this section I wanted to go over changes of character and flip zones, what are they and how do we use them. So change of character, also known as a CHOCS, that's the abbreviation, is essentially where we see money swap hands and ultimately the market will go a different direction. Now, if we imagine the bigger infographic being a 15-minute time frame, and in this example here, we are currently bearish. We're putting in lower lows and lower highs. So supply is in control at all these points and demands are failing the whole way down. Ultimately, what we're looking at here is a bearish scenario. But at some point, this trend has to end and there will be some sort of a pullback. Whether it's with trend or counter trend is irrelevant. At some point, supply will lose control and demand will take control. Now, a change of character is essentially a sweep of the lows and a sweep of the highs. Whereas a flip zone is this particular scenario in here where supply had the last point of control here and ultimately supply fails and you can say something in here caused it. Sometimes you have multiple demand zones that could have been the cause. We will get into more detail how to spot these, but to keep things simple, we're just basically going to say even if you did have multiple demand zones here, at some point what the market does is as it comes into the supply zone, it'll have a reaction. And as this reaction sends price sending the other way, something else will come in and cause this reaction point to fail. And if the reaction point is where we tap into the supply and go the other way, we're going to look for the cause of what took the reaction point out. Now, about 3 out of 5 times, that'll be where price will ultimately come down to and take off. The other 2 out of 5 times, price will go to the extreme. Now, this will work different from pair to pair. Euro USD in particular is not one to love the extremes. It'll usually go off what took out the reaction point. Whereas if you get into a pair like GBP USD, it seems to like its extremes a lot more and seems to come down here a lot more than Euro does, and that's just a pair characteristic. The idea is if you do have multiple zones, you don't need to just place an order on all of them. The market is fractal, and ultimately what happens on the 15-minute will ultimately happen on the 1-minute as well. So this change of character scenario is ultimately a sweep of the lows, sweep of the highs, whereas a flip is ultimately the demand taking control from supply, or a fancier name for a break structure, if you would. So rather than guessing which demand zone we enter on, we look for this exact same scenario on the 1-minute. And ultimately, we tap into a 15 POI here. And once again, we sweep the lows, we sweep the highs, we find the cause, and we enter on the cause. Now, with the lower time frame, you may have 1 or 2 of these fail before it goes. It doesn't always go on the first one. As long as your analysis is correct and you are going with higher time frame of why price should go that way, most of the time you will be correct and it'll work out for you. So don't freak out if the first one doesn't work. With the risk reward this system gets, it's alright to take a hit or 2 or even break even on a loss or whatever. It's not a big deal. Now, on the flip side of things, we have the bearish chalk. And this is the exact same thing, but flipped over. So we're putting in higher highs and higher lows till we ultimately hit a higher time frame supply zone. So in this particular case, it is a 15-minute that hit a 4-hour supply zone. You sweep the highs and you sweep the lows. You find the cause. And ultimately, we're going to look for an entry on a smaller time frame, such as the 1-minute, where we will basically look for the exact same setup again. We sweep the highs and we sweep the lows, ultimately completing the chalk. Now, couple of things to be mindful of is CHOCS and flips are different. CHOCS always sweep the highs and the lows, or the lows and the highs, depending which direction we're going. Whereas a flip zone is essentially, again, a fancier name for a break structure, as supply takes control from demand, or demand takes control from supply. Now, this will probably make more sense as we go on to the charts and I show this in action, but in essence, this is the simplest concept. It makes a lot of sense once you apply it and use it over and over, but you have to understand how to use it. There has to be a higher time frame narrative. For example, what I mean is, if price just hit a 4-hour supply zone and you're entering every flip and chalk just on the 1 minute like this, you will likely get burnt. So what we want to see is tap into the 4-hour zone, and we want to see something higher time frame like the 15-minute fail before we even think about selling. Even if it looks like we should start selling up here on the 1 minute or the 5 minute, we wait till the 15-minute breaks, and the 15-minute aligns with a narrative of shorting. Yes, you'll miss trades, but I promise you, you're going to miss a lot more losses than wins. So it's very important. This is how the system works together with the 4-hour and the 15-minute. So the exact same thing here as we tap into this demand zone. We're again going to wait for a 15 supply to fail before we just start buying. I don't really care if there's a 1 minute break of structure here and here and here. We don't just start buying for no reason, because often, more often than not, what will happen is the market will do something like this. It'll start going up, then it'll come down. You don't actually know when it's done playing in this demand zone. Whereas once we break something higher time frames, such as 15, it is a much higher probability setup to now enter in here and look for a either pro trend move or counter trend pullback, whatever the scenario may be. It's very important we get this nailed down, guys. We want to be with 4-hour structure and 15-minute structure. This is what will keep us from taking a lot of extra losses. We're gonna end this video here. I will see you guys in the next video where we look at this on real candles.